Welcome to Technical Analysis 101. I'm Jay Wise-Free with Team Cracking Crypto. Today we're going to be talking about pitchforks. Now, pitchforks are trend line indicators. There are many benefits to using a pitchfork. You can easily identify key points in a trend line where the market pivots. These are zones of interest, areas that you want to pay attention to, areas where the market is likely to reverse and price is likely to rise or fall or change its momentum in the current direction that it's going. Now, using a pitchfork, you can refer to some of the rules that we're going to go over here in a little bit, the rules that follow pitchforks, and that knowledge is that price likes to reverse to the median line. And the median line is this red line right here that runs through the middle. All right? This is a signal line. Now, this is similar to using trend lines. It is using trend lines. Basically, you're just charting a channel trend, but it's a little faster, especially if you are in TradingView and you just load up the Pitchfork Trading tool, the drawing tool right here. It is 3 icons below your user icon in the top left. So you've got your cross, your trend line drawer, and your pitchfork. You just click on it, and I'll show you how to do that right here. So you see I've drawn this pitchfork right here. So I'm going to click on this and I'm going to delete this, and I'm just going to show you how this is done. You left click on the pitchfork icon, and then there are 2 ways to do this. If you want to chart an uptrend like this, you want to find back here in the chart's history, you want to find a market bottom. You want to connect that to the next market top, and then connect that to the next market bottom, just like that. Now right click after you do that so you don't draw another pitchfork, and you can see we've done that. Now it helps if these things are as accurate as possible. So at this point you can zoom in and you can kind of fine-tune your points, get them right on top or on bottom of whatever you're charting, right where they need to be. There, that helps make it more accurate. Now you can see that we've got this nice pitchfork right here. There is another way to do this with drawing trend lines, and I will show you how to do that later on in this video. But it's that simple. Now, the problem with using pitchforks, if you're using this as your only indicator, is that they are subjective. And the reason that they are subjective is that you can make them reflect what you want to see. That's why I like to use the rules of using the lowest low in the past, the highest next high, and then the next lowest low. And that will give you an accurate pitchfork channel. However, you can take this and modify this. Say you want to see a trend that you want to see. Well, you can distort this to see what you want to see, and that's the problem. You don't want the chart to reflect what you want to see. You want the chart to reflect reality. So that can be a con when you are learning how to use pitchforks. So let's go over 5 common rules to use when using pitchforks. These are going to make you feel pretty comfortable. So the first rule is that when drawing a pitchfork, there is a high probability that price will reach the latest median line. So if we take a look at this pitchfork that I've drawn for Bitcoin USD on the 4-hour chart, you can see that I've drawn it, I've connected the previous low, the next high, and then the next low. All right. Now, how can this help us? Because we can see that the median line is right here. Well, if we know that price is likely to reach the latest median line, what will the future tell us? The pitchfork is telling us that there is a high probability that this price will rise back to this price. So if you were buying on this dip, if you do believe that this is the market low and there are other indicators to determine a market low, you would feel confident, or a high probability of confidence, that the market would bring the price back up to this level. And I've actually scrolled this back in time, so if we move forward into the future, we can see that indeed price did rise to meet that median line. And take a look at these quartiles, these quartets. These are areas, these are other zones of interest right here. So we can see that the outer limit is defined by the market low. It rose up, broke through this quartet, came back down to test it. This is a support level. Rose up, trying to rise to the median line. Couldn't quite make it. You could draw a parallel line right here if you wanted to, if this happened enough times. You could draw a parallel line like this. if that support line got tested commonly enough to make this an indicator of resistance. You could draw that support line. It got tested once, twice, a third time would make that would be a final confirmation of a dominant resistance line. But now we see that price went back down, broke through the quartet, came back up, tested it again, broke through it a little bit, came back down, up. Now it becomes a support level, went up, down, broke through it, up, bounced around, and finally we come up to the median line and broke through it, tested it. It's now support, breaks through, it's now resistance. We break through it, and then we continue on this dance until we see all the way to the upper quartet, came down, back, crashed down through the median line, price reversed at this quartet, and then finally what we see here is this pitchfork is no longer valid when price breaks through the upper limit of the pitchfork. And that's the point where we need to draw a new pitchfork or rely on other indicators until we can find a more reliable. So the first rule again, price is likely to reverse to the median line. So that would have been very helpful to know if we were right here in time. If we were right here in time buying on this dip, knowing the price is going to reverse up to this median line, look at all the money that you could have made trading this channel. This is ridiculous profits you could have made all along here. This is all profit all along here. Looking for the price reversals of these quartets, looking to sell at the medians, looking to buy the dips, selling at the upper limits, coming back down, knowing price is going to reverse the quartets, selling at the median lines, selling at the quartets. It's just profit all day long. And this channel too. You know, this is expanded, but you can, or excuse me, that was zoomed out, but you can zoom in on this. Look at all this. Look at all this trading opportunity all day long. And this is on the 4-hour chart. You can switch to a 15-minute chart, a 1-hour chart, and day trade this all day long. It's beautiful. So moving on to rule number 2. Price will either reverse the median line, gap, or zoom through, and I apologize, it's supposed to say zoom, or consolidate above or below the price. So we can see here, this is a chart of Factum. We can see that we drew this pitchfork, the low to the high to the next low, and we see here that price reversed here at the median line, consolidated down. We saw good signs of consolidation back here, if you remember, all this channel, all this consolidation. This is all median line consolidation, all good profit opportunities. We can see back here, price is consolidating here again after a dip down to the quartet. But when we actually hit the median line, we either consolidate around it, as in right here, or we blow through it, as we just see here with Factum, what Factum just did. Third rule of using pitchforks: when price passes through the median line, it will pull back and retest the median line before continuing. So as we can see here in another chart of Bitcoin on USD, on Coinbase, we can see here that the median line is broken, price passes through the median line, price reverses to test the median line again, actually breaks through it to the downside, comes back up to test it again, and consolidates around the median line before continuing its onward journey up and out to break the upper limits where this pitchfork no longer is valid. Fourth rule, price reverses at any median line or median line parallel. As we saw, a great indicator would be this Bitcoin chart right here, where we can see price reverse at this quartet, price reverse at the lower limit, price reverse at this quartet, price reverse at this quartet, price reverse at the median line all through here, price reverses at the upper limit, price reverses at this quartet, price reverses at the upper limit, and then finally again we break through. But if we look at this chart of Stratus, we see here that price reverses at the lower limits, price reverses here at the quartet, again at the lower limits, price reverses at this quartet right here after a little fake breakouts right here, reverses after a breakout through the median line, reverses here at the median line, all the way through. So again, these are zones of interest for you to set your buys and sells when you're channel trading like this, when you can see that, look, wow, history tells me, the charts tell me that these quartets are areas where the price changes. Wow, there's something to this. And the fifth and final rule for trading pitchforks is Hagopian's rule, and that is when price reverses before reaching the median line, it will move more in the opposite direction than when it was moving toward the median line. And all that means is that if there is a reversal if the price reverses on its own without actually touching the median line, it will move more in the opposite direction than it did on its way toward the median line. So here we can see that price reverses here, and it moves more in the direction of the median line. It breaks the gaps all the way through it than it did on its movement away from the median line. So if you chart this movement away from the median line compared to this movement toward the median line and through the median line away from it, that is what Hagopian's rule is. So here again we see the exact same thing. We see price move toward the median line, reverse prior to the median line, and then gap all the way up here. So it will move farther away depending on which direction it reverses at. If you're moving away from the median line and you reverse moving away from it, you're going to move toward it and through it at a higher pace than you did moving away from it. And if you reverse moving toward the median line, you're going to reverse away from it farther than you did moving towards it. So there is a brief introduction to pitchforks and how you can use them. Again, there are practical means to doing this. These can be very helpful. Again, if you go back and look, if you were to look at this Bitcoin chart and you were trying to trade this, if you were trying to buy this dip right here and you drew this pitchfork right here, knowing that price is likely to revert back to that median line, that would have made you a bunch of money. How much money? Let's see here. When price actually hits that median line. How about 86%? 86% that trade could have made you. Now there is a different way to draw this. If I pull out this and I delete this, this can help you with drawing Elliott waves, and this can also help you with drawing your pitchforks. You can draw them on your own. So you just bust out your trend lines, and what you do is you start here at the bottom. You're going to draw a trend line up to the top, click on another trend line. You're going to draw another one down to the next bottom. You're going to click another one. You're going to draw to the next top, click down to the next bottom. You're going to have to lower this down a little bit more. Alright, click at the bottom, rise to the top, and chart the next one, and the next one. Alright, so after you've done that, you're going to click up here, right next to the ticker symbol. You're going to click this little eyeball, and what that's going to do is that's going to get rid of, that's going to get rid of the chart. That's going to get rid of the candlesticks. So now you can see your own trend line, your own Elliott wave formation, and you can count the Elliott waves. 1, 2, 3, 4, 5 on the upside. 1, 2, 3 to the downside. And now we're looking for the next Elliott wave formation would be 1, 2. We'll get into Elliott waves at a different time. But this is a way that you could draw your candlesticks. And what I mean by that is you can either do it right here. You can connect point A to point B to point C, and you could have traded this channel all along here, because we see price goes up, breaks through, but it comes back down to the median line and back up, reverses at this quartet. You can see that. I didn't draw that with the trend lines. The pitchfork shows that. Or if you wanted to draw a more long-term candle, you could go from point A to point B to point C, and this would bring us to where we're at right now. So if you were looking to buy this dip right here, you can see we've broken through the quartet. You're either waiting for the lower limit to be tested, or you're putting buy orders here and buy orders here, and you're waiting for this price reversal to touch the quartet, sell a little bit right here, wait for that breakout back to the median line. Or you're waiting for this lower limit to be broken and the evidence that this pitchfork is no longer valid. You have to be open to what the market tells you. And, if I were to draw that pitchfork again, right here, and then if I were to click on this icon to bring the charts back, let's see, I don't know, you tell me, is that valid? Look at that. Reversal at the quartet, reversal slightly before the quartet, break through the quartet, back up to test the quartet, back down. Now we see a green candlestick showing bullish movement toward that quartet. Will it be a test of resistance? We see it broken through, false breakout right here, back down. Will it test it again? Down, test it again, break through to the median line. That's what the Elliott wave formation would say. 1, 2, 3. 1, 2, 3. So that's how you can practically use pitchforks in your day-to-day trading. Thank you for tuning in, guys, for your Technical Analysis 101. Again, I'm Jay Wise Free with Cracking Crypto. If you have any questions, please feel free to join our Telegram group and our Discord, and we'll be happy to help you there. Happy trading, guys.